Okay, buddies, welcome back, and now it's time to discuss cooperatives. Alright, cooperatives are the businesses owned by, or you can say, owned by their workers or customers. Simple and easy. Alright, who share the profits? Who share the profits of the business. Alright, here are the some common features of the cooperatives societies. Number one, it has open membership for all. Number two, democratic control. That is that means one member, one vote. Other is distribution of surplus. That means profits and proportion of purchases. And lastly, it also has promotion of education. So far, so good, guys. Uh, although limited companies have some of the measure of democratic control, this is one of the basis of share. One more. So one shareholder could dominate a company if they hold a measure of shares. This would not happen in cooperatives. Next, we need to know what is mutual organizations or mutual associates. Alright, mutual associates are similar to cooperatives, alright, in that they are owned by their members rather than outside investors. But some financial companies used to be mutual associations, however, building societies in UK, such as AB National and the Halifax, converted from being mutual associates to being bank. Alright, the nationwide building society hold out against this so far, citing the lower interest rates. Alright, alright. So generally, mutual organizations, or you can say mutual associates, deal with intangible assets. Alright, intangible assets are those assets which cannot be touched, which cannot be seen, which cannot be feel. Uh, Intangible assets, or you can say intangible products, uh, such as financial services. For example, ACCA, right? ACCA has uh, this accountant in business paper, F1 paper, management accounting F2 paper, F3 finance accounting paper. These are the ACCA products, all right, and these are intangibles. We cannot touch them. We cannot feel them. So the organizations who deal with this such kind of products are mostly known as mutual associates, who has whose clients, whose members, and another the clients and the members of such organizations are, members are the owners of the business. They do get the share out of it, right? So this is mutual associates. So far, so for good, guys, and I hope you get it. Now, stakeholders. Who is stakeholders? Stakeholders are the interest holders of the company. Are the interest holders of the company of the organization, and it can be said that stakeholders are those who can affect the organization or can get affected by the organization. For example, now let us see the examples of the stakeholders. All right, so stakeholders, um, employees, yes, they can get affected by the organization if they didn't get salary on time, or if they get salary, get a report for their services. And both way they can get affected. They can affect the organization by contributing positively. So they are the stakeholder. The management includes directors and senior management. They can affect the organization by worse and good performance. They can get affected by the organization. The government, well, uh, government can affect the organization by putting restrictions on them, by giving relief to them, and even though they can get affected by the organization by taking tax, by not getting tax. All right, uh, nature, such as plant, tree, trees, sea. All right, they can affect the organization in a way that if storm comes out and they hit their plant, their factory, they can get affected, and they can affect the nature by spilling out the wastage into the sea, uh, the wildlife. All right, even the wildlife can get affected in the same way as nature. Public at large can affect the organization by you know by criticizing them, by you know criticizing them about their products, about their activities. And organization can affect the public as well by their services, etc. Right? And the shareholders, actually the owners of the company. All right, they can affect the company by taking out their investment, and they can get affected by the company if by positively by getting dividends, by negatively by not getting returns of their investment. So these are the some examples which you need to know. So there are various types of stakeholders known as internal stakeholders. All right, internal stakeholders include management, employees, right? Managers and employee, all right? What interests they do have in the company? Interests to defend, well, that's money, that's benefits, promotion, satisfaction. Then the response to risk are pursuit of system goals, um, industrial action, negative power to impede implementation, refusal to relocate, etc. All right. Then we have connected stakeholders. The connected stakeholders who are not directly involved into the company, but they are connected to financial statements or some other way, such as the examples of them shareholders, bankers, um, suppliers by whom we do purchase our raw material, etc., and our customers, the organization customers, right? And for this, um, what interest they do have for their defense? Well, shareholders will say increasing, will ask for increasing wealth, that is increasing dividends, etc. The measure profitability by PE ratios, market capitalization. They will ask for more capitalization, market capitalization, more growth in market share. That means they will want less risk. All right. Bankers will ask for security of loan. Uh, they will ask for adherence of loan agreement. They will say ask for profitable sales, payment for goods. Suppliers will ask for payment for goods, and obviously long-term relationship between them, obviously, and how you would respond to those risks. Well, the risk that shareholders will sell their shares, all right, or they will boot out the management, they will criticize them, they will not elect them into the future, all right. Bankers will deny, uh, just a second, yeah, management may say that they will bank, okay, bankers may deny the uh, denial of credit, they may either refuse to give credit, or they may ask for high interest charges. The receivership, okay, uh, supplier may refuse to give goods on credit, receive refusal of credit. They may take court action against company, against organization. Um, they may wind up or wind down the relationship with us, with the company. That's another risk. Customers can buy from elsewhere. Uh, they can sue us if we do not don't do well. All right, and we have another type, that is external shareholders. External shareholders can be government, right? Uh, the pressure groups, we have professional bodies, okay. And what are their interests actually? Uh, their interests, the government will ask to give jobs to the people. They will ask to provide training to the people. All right, they will. Their another interest is tax. They want tax from the companies, and interest of pressure groups will say to spread less pollution in the environment. All right, they will ask for the human rights and some others. Right, then professional bodies such as ACCA, they will asked to maintain the members' ethics. Okay. Now, how to respond those risks? What are the risks which faced by those bodies? Well, the risk are tax may increase. All right, they may put some tough regulations on our industry, on our company. They can take the government can take legal action against us. Pressure groups will do publicity against us, either good or bad, depends on the circumstances, right? Then we have they can take direct action against the company. All right, they can put pressure on government against the company. Okay, professional bodies, they can impose ethical standards on the organization. So far so good. Okay, stakeholder conflicts, guys, and conflict between stakeholders can be common. Uh, for example, shareholder wants higher returns, right? Management want management or employee wants high salaries, bonuses, etc. All right. Uh, Customer wants high quality products. All right. Government want to give jobs, they want taxes, etc. So these are the conflicts which can be arise between the various stakeholders. All right, shareholders might ask for the highest return, management employees ask for higher salaries, bonuses, customers for high quality products, government want to give jobs, taxes. So we have to manage those conflicts between various stakeholders to run the organization effectively and efficiently. Otherwise, it may be difficult to uh, to manage those company with those conflicts. So the Manlove, the theorist, the writer suggests that stakeholder may be positioned on a matrix over their power held and the likely of their interest in the organization activities, and then we should uh, manage those risks. For example, this is the map, right? 2 by 2 quadrant, that is 4 A, T, C, D. All right, that is the level of interest. It's low, it's high. Here it is power, that is low and high. Okay, now look at it. Okay, let me change the color for it. All right, if the level of power is low, if the level of power is low, and also uh, the level of interest is low, right? All right, if the level of interest is low and also the level of power is also low, that is segment A, just minimum efforts need to be put on them, ethically nothing more than that. All right, if that is segment B, where They have the segment B, who has high power but low interest in the organization. Alright, they can influence the organization. Alright, they have high interest such as lobbying firms, uh, lobbying firms, or they can combine with other stakeholders and can create the problem for the organization. So good care should be taken on them as they have high interest and low power. So just keep them informed, keep them informed about the organization activities, and that's it. Then we have segment C. All right, they have high power. All right, their power is high, but the low interest, such as government, they can they are like sleeping lions. All right, they are just like the sleeping life. If they woke up, they will not leave you. So just take care of them, uh, take care of them, keep them satisfied with their requirements, etc. And then finally, we have segment D, who have high power and high interest, the key players of organization. Maximum resources should be put on them to keep them satisfied so that company will keep growing and keep going and keep growing in the future. All right. So that's the Mandlo's framework, and I hope you got it. And we are done with the chapter as well. See you in upcoming topics. See you.